Now, Sun TV is not having such a bright morning. Company reported fourth quarter numbers and they seem to be a miss. Vamakshi has more details. Vamakshi, so what's the issue here?
Well, absolutely not looking bright. And in fact, when we look at the numbers, revenue has come in nearly 4% versus the limited estimates on the streets. But it is a miss as far as EBITDA, margins as well as profit is concerned. Revenue did see an uptick of almost 14% on a YOY basis. But it is important to know that most of this growth is largely being led by their cricket franchise income. In fact, Motilal Oswal says that adjusted for this cricket revenue, the total revenues have inched up only by 2% on a YOY basis. And this could be mainly on account of weak ad revenue. The EBITDA margin too has seen a dip of almost 510 basis points on a YOY basis, and this is largely being led by higher operating expenses. Operating expenses inched up by almost 23%. Cricket franchise fees also saw an uptick of 117%, and other expenses also saw an uptick of almost 41%. The net profit has come in at 400 crores for the company. This is an uptick of 9% on a YOY basis, but in fact it is a miss as far as the street is concerned. We have a couple of notes coming in from brokerages as well. Kotak highlights that the core business has disappointed. A weak quarter was reported both on absolute as well as relative basis. The ad revenue has seen a decline of almost 2.5% in the fourth quarter, and this is likely due to some market share loss in their opinion. But nevertheless, they believe that the stock offers value even after factoring in structural risks. But given the recent run-up, they've gone ahead and downgraded their rating on this counter to add from buy, and they've revised the target price to 740 as compared to 725 earlier. Motilal Oswal believes that the company has a conservative approach towards investments in OTT, and this in turn poses a key risk within the rapidly growing space. They broadly retain their estimates. They're factoring in a gradual recovery in ad revenue, continued momentum in the subscription revenue on account of NTO 3.0, as well as higher IPL revenue in FY25 owing to the team's performance. They're expecting revenue and EBITDA CAGR of 7% each over FY24 to 26. They've reiterated their buy rating and target price of 790 rupees per share. But the company has reported a weak set of numbers this time around, and as a result, the stock is tanking in the trading session today.
Thank you very much for explaining that. Let's get